right. Okay. So we will kick it off now. So let me just give you a bit of a background, and before I share the screen and discuss about what we are going to cover today. Now, this is kind of for those people. This session, this webinar will be lasting for 1 hour. So we wanted to finish it early, but quite a few people, have shown interest in finding out or learning about the uh, the SAP, SAP and the tax part of the SAP. And so what we'll be covering today is the basics of tax. That means we'll talk about direct tax, indirect tax, and also we'll discuss about uh, the configuration or setup, very basic levels. So starting from the beginning, if you are very new, because I understand that quite a few people have messaged me saying that I'm very new, can I learn, or can I understand? Yes, absolutely, you can understand the basics, because that is where you start. Sometimes as well, if you already are familiar with SAP, it may be a bit easier for you, but the basics of tax, basics of configuration in SAP, what you need to do is quite important. And by learning this, whatever you will be learning today, how will it help you in your career? Well, if you are already in SAP, definitely this is something additional you'll be learning about tax. So if you are already familiar with SAP and the finance module of SAP, or if you are working with the sales and distribution, or the material management or procurement side, you will understand, or it will give you more clarity. But if you are just starting out, so you are looking for opportunities in the field, because quite a few graduates reached out as well. So for you as well, this will be a very fundamentals. You learn about the fundamentals of tax, fundamentals of SAP, which will help you to get into a career in in consulting. It could be okay. I'm getting a call. Sorry, let me see if that's something I'm not able to. Okay, so we'll catch up later. Yeah? Okay, sorry, I think few people called saying that they are not able to view the webinar. I'm not sure what's happening, but those of you, I am recording the session, so you'll be able to go to you will be able to listen and learn from the recorded webinar as well. So let me just share the screen, then we will start the webinar. And okay. Okay, so let's get started with our okay. So if you are able to hopefully you are able to see my screen. So we are covering the configuration bit of indirect tax. How do you configure your indirect tax requirement in SAP? So that means I will go to the basics of the tax, and we'll discuss about the configuration part of the SAP as well. Okay. So let's discuss about taxes. What is tax, or what are the different kinds of taxes? Okay. Now, for those of you who do not are not familiar with tax or accounting background, it will help you. But if you are already familiar, then probably it will make more sense to you. So, direct tax. So there are two kinds of taxes. So one is direct tax, and another is indirect tax. Okay. Now, the basics of taxation, the way it works is the burden of tax. So, what is direct or indirect? The difference is when the burden of tax. So that means, when the tax is levied to you, that means is applied to you, then the burden, so who pays eventually, okay, that's called the burden. If somebody taxes me or asks me to pay, the government asks me to pay, but I can pass it on to someone, that the burden of tax is now passed on to somebody else. However, if the burden of tax, that means I am the one who is uh, paying the tax, that means the burden of tax on myself. So direct tax is when the burden is on the person who is levied the tax, okay, on. So that means if I am been levied the tax, so I have to pay the tax. That is a direct tax. If I can pass it on to someone, that is an indirect tax. That means indirectly the tax is being calculated or being collected by the government. Very sort of a potent slide, or picture you can relate more. So this is the government authority. If you see to the right of it, is the government authority. When it's you are directly paying, that means it's a direct tax. The money I pay, you know, I pay the tax. So that is the direct tax. So that if you are going for shopping, and wherever you go for shopping, that shop, applies or asks you for tax, that is called indirect tax. Okay, so now you understand the difference between direct and indirect. So that means the tax what you pay at a shop, okay, is called indirect tax. But at the sorry, at the year end or on your pay slip, the tax what your employer takes away is called the direct tax. So examples of direct tax is income tax is a direct tax. Property tax is a direct tax. So that means I cannot pass on my income tax burden, okay, whatever I have been levied, the taxes on. So the tax amount, I cannot pass it on to somebody else. Okay, that is my income tax. My income, I have to pay tax. So that is called income tax. Property tax. So if I have a property, and government wants to levy the tax based on the value of the property, okay, that is also a direct tax, because I cannot pass it on to somebody else, because I own the property. This is my property, and that is a direct tax. But indirect tax is more related to businesses. Okay, so that means indirect tax is when um, you know you can pass the burden to somebody else. Uh, Prime example is VAT. We discussed about it. Okay, or GST. Okay, in certain countries it's VAT, certain countries it's GST. Even excise duty as well is paid on when the goods, customs excise. When goods are imported into a country. So these are on business specific, but trading related. So that is the reason why the burden of tax, even if I am paying the tax as a business owner, okay, or as a company, I pay the tax, but I can pass it on to my customers. Okay, so this is why it is indirect. You understand now, because this is passed on. Whatever I pay, I can pass it on to my customer. That means I can collect the tax from my customer when I sell the products, and when I buy, I pay the tax um, to the seller of the product. Okay, so now hopefully you understand this direct tax and indirect tax. And again, we'll discuss about what are the different uh, you know indirect. Okay, okay. So we will come to that as another slide. I think the fifth slide is all about different kinds of indirect taxes as well. We'll discuss about that. But where the complexity, so we'll discuss about now the indirect taxes. So the scope of the webinar now is the indirect tax. Okay, so now indirect tax and MNCs. Okay, so that means all these multinational enterprises or corporations. How do they, or how, if you are working in an MNC or you are asked to uh, set up the system, SAP system. We're talking about the SAP system. There are multiple ERP systems. The SAP system is one of them. Then you are, you know, going to learn now that how do you set it up and what is the usually the requirements. Okay, what are the requirements? Now for MNCs, as you know, multinational corporations. So the headquarters is in one country. Okay, so that means let's take for an example, let's say um, in the UK, we have, in the UK, let's say pharmaceutical company, let's say GSK. Okay, now GSK as a pharmaceutical company is established, headquarters is in the UK, but they have operations in their manufacturing facilities. They have the offices all around the world. Okay, now, so the countries, if you see, head office is in one country, in the UK, but the operation could be in India, could be Spain, could be United States, and multiple different countries. Same example, you take for the Coca-Cola company. Okay, one of the oldest company there are there. So if you see their operations in so many countries. Okay. So when you grow the business, okay, from one country to the other countries, you have to set these things up in your own system. So that means ERP system or enterprise planning. So uh, the your ERP system should be able to handle it. Okay. So now if you see indirect taxes we are discussing about, and this complexity starting to arise, that okay, MNCs have operation in multiple different countries. So that is one organization having offices in multiple different countries. And that is where in SAP, we have different the way we set up the SAP is, we call it company and company codes. Okay, so to depict or to show, we'll get into the system as well to show you how the setup is done. But at a high level in SAP screen will show you. But this is how it works out. Okay, so one company having different company codes. So that means in SAP it's called company codes. Okay, that means the main group of companies is called company, and then multiple different legal entities in different countries. Even different countries they may have different legal entities as well. So they are all when it's a separate legal entity, it's called a company code. Okay. So now if you see here, starts, the complexity becomes more kind of a complex here. Why? Because now the operation started in one country. They have now multiple countries. They expanded into. Now, as you know, the tax is a country-specific law. So that means the tax laws in the UK will be different than tax laws in India or in the United States or Spain, Portugal, other countries, because every country have their own way or different ways of levying the taxes, different ways of collecting the taxes, different ways of managing or administering the taxes. Okay, so here comes the complexity of different countries, and how is that going to set up in the system? We are going to see that in just 1 minute. Let me just stop sharing. I will share the SAP screen now, and we'll go through the SAP screen to show you these setups. So these are all basic setup before we get into the taxes. Okay. Before we get into the taxes, so we are going to now go to the setup of the company and company code, that is group entity. Okay. And we'll also discuss about just trying to log in as into the SAP system. Okay. Right. So I've just logged in. If you are very new to the new to SAP, let me just show you how does that look like. If you are familiar with SAP, so that means you know everything. Please bear with us because there are some new people may be interested. Okay, so this is how the SAP screen looks like. Okay, so once you log in, okay, so you'll have a username and password of your organization. Once you log in, then this is how it looks like. Now this is the easy access screen we say, and there is another screen where you configure things. Okay, so we'll discuss or we'll go to the configuration screen. So the transaction code, there is something called a transaction code. That's the basics, alphanumeric kind of numbers or alphanumeric codes the corporation or SAP has given us to directly go to a specific screen. So SPRO is the configuration. So we'll go to the configuration and we'll see the setup now of how an MNC is set up in the system at a high level. Okay, there are so many configurations as you can see. SAP is an ocean of so many setups you can do. What we'll do now is we'll go to enterprise structure. Okay, this is where you define, okay, the organization before we get into taxes at a high level. Let me show you how. So here, if you see define a company, so you define a company here. There are so many companies here. So you define, okay. So for example, that is one company. So you define this is a number which you can give itself a number where it's a name, and so you can here and you can establish or you can create a new company. Okay. Now, as we discussed earlier, what is that? This is a group, okay, and its headquarters is let's take an example. We discussed about headquarters in the UK. Okay, so that means this is a group entity. There are so many entities that have been set up here. This is again a test system where I am showing you that it's a test system. It's not a real live system where transactions are happening or somebody is trading. This is a demo system. Okay. So now, if you see here, and all these details along with your company, there are some details about the language, currency, and the country. These are it's set up. So we have set these up here. So now we, after we set up the company, that means the legal is not yet a legal entity, but a group entity. Okay. Now we go further down, which is our legal entity. So this is the most important entity in your SAP system, which is called a company code. So there are so many company codes. I just wanted to show you one. Okay, somebody using it. Okay, so let's take for an example HSBC. This is a company code. What is a company code again? A legal entity. Okay, legal entity means it's an entity which is incorporated in the country's law, by which this is a separate entity which is able to operate and has to file its tax returns, file its accounting returns, self-assessment on our annual basis. So now you see here. So these are some details we have put together about the again country, currency, and language. Okay. So now you understand that company and company code, okay, is the entity and the group entity. The group entity is the company and the entity is the company code. Okay. So after you set it up, again, there are so many configurations, we won't be going through those. But then after you define, there is something called assign. So we assign. What did we discuss? That we assign the company code to company. Okay. So this is where the assignment happens again. Using it. So a company code is then assigned to a company. Now you can see For example, this company code 0012 is assigned to a company. What does that mean? So that means this is a group entity, one company can have multiple company codes or multiple legal entities. Okay, so that means GSK or Coca-Cola in the United States, has a legal entity in the UK, a legal entity in India, um, Brazil, other countries. So that these are legal entities. So that means these are all assigned to one company. All company codes are assigned to one company. Okay. So now you understood the basics of a high level. The organizations are set up with operation in different countries. As you can see, that company codes are every company code has a country. So now comes the challenge of company code and the country challenge. What does that mean? So that means the challenge is that the company is set up in one country, that is group entity, and there are multiple legal entities there. So how are the taxes going to be calculated? Okay, so let me just go back to our screen. Okay. So this is where we are going through the slides. Here the complexities we are discussing about now, that okay. So now we discuss about the types of taxes. So we saw there are different legal entities in the system. Now different legal entities are in different countries, and different countries have different type of levy of taxes. Okay, types of levy. So for example, there are countries which are impose VAT, which is called value added tax. In Europe, most of the European countries, or all the European countries, EU especially, they are all on VAT. They call it VAT, value added tax. And even in China as well, they have value added tax as well. And they call it a golden tax system. And in Russia as well, they have, and a few other countries as well. And I think in Singapore as well, they have VAT. So, just to give you a sneak preview or snapshot of taxes, VAT is one kind of levy, or one way of administering an indirect tax. Okay, there is other kind of terminology has been used as well. Similar concept, which is called GST. I know. And goods and services tax is GST, which is applicable in India. They call it, GST in Australia, New Zealand, and in federal Canada, because Canada has different levels of taxes. They have federal tax, and they have jurisdictional taxes or provincial taxes, which is called PST and HST, which stands for provincial sales tax and harmonized sales tax. They have other topics as well. And now there is another thing called SUT, which is sales and use tax. This is very specific to the United States. And United States they haven't implemented VAT regime yet because of the complexity and number of jurisdictions. They have multiple, six levels of tax they, that is applicable. So that is kind of jurisdictional tax in the United States. Okay, so now you can see there are different kinds of taxes based on the country's tax laws, or indirect tax laws we are talking about, because direct tax we are not discussing here. Now there is another difference, in the types of taxes, which is called input tax and output tax. Okay? So that means these are based on the types of levy, the types of transactions, because these, the indirect taxes, as you can understand, these are based on business transactions, businesses. These are not specific to the income. Okay, these are specific to the businesses of trading. So when we are talking about the trading, there are two parts of trading: buying and selling. Okay, and that is where we have the types of transactions are input and output tax. What is input tax? Input tax is the tax or while you are purchasing something, that's called input tax. And output tax is a tax on selling any product, the input and output tax. So now with this knowledge in your mind, you are clear on the concept of the taxes and MNCs and how they operate. Now we briefly discussed about SAP as well, how in SAP we set up these MNCs, okay, at a high level. Now we'll discuss about the tax setup, how these MNCs, which already we have set up, for example, a Coca-Cola company, we already set up in the system. Now, how are we going to proceed um, to the setup of the taxes? Okay. Now, here comes the basics of taxes in the SAP system. So that's something called a tax procedure, which captures the country's tax requirement. What does that mean? We discussed about types of levy, which are all GST in India or VAT in Europe, in the UK, or in Spain. Now, these are all different kinds of taxes, and these taxes, different kinds of taxes, which have different laws governing these taxes, the country's laws. Now, they are captured in something called a tax procedure, and this tax procedure is nothing but the indirect tax laws captured in the system. SAP calls it tax procedure. That is procedure of calculating the indirect tax in the system in that specific country based on that country's laws. It's called tax procedure. Okay. So as you can see the snapshot, we'll go through, we'll check that well SAP screen. But if you see the tax procedure is a one-to-one assignment. One country can be assigned to one tax procedure. This is an assignment. So country GB is assigned a tax procedure tax GB. So that means one country has one tax law that cannot be multiple tax laws. And what is the tax procedure? That is the tax reflection of the tax laws, indirect tax laws of that country, or transactional tax laws in that country is reflected in the tax procedure. Okay, hope it makes sense. Hope it you are able to digest or you have to understand. It's very basics. Okay, you understand about the tax laws of the country and different tax the legal entities will abide or which has to follow the tax laws of that specific country, and that specific country, now we see that specific country have the tax laws, and that tax laws are set up in the system in SAP called the tax procedure. Now, if you see here in the tax procedure, we have different kinds of, this is a snapshot again of how this is set up. Now, if you are very new to this screen, do not worry because these are very easy to understand. Okay. So what is this? Now you can see tax GB is the procedure. Okay, I understand that. You understand that this is the tax laws of GB we're talking about, and how is it set up in the system in SAP. Now, if you see, there are some steps here, and there is something called condition types here. Okay, and the description here. So what is it all about? Okay, let's discuss about that. So we are setting up the system, or we are asking the system to say okay, to calculate what a transactional tax. Okay, transactional tax is nothing but the indirect tax. How is it going to be calculating this tax? So there has to be a base amount. That means transaction tax again is selling and buying. When you are selling, that is the base amount, the price at which you are selling. Okay. So we are configuring the system, setting up the system, so the system understand and how we do it and how exactly it's done. We have a base amount. And on top of the base amount, we have to calculate the tax on base amount, right? Base amount is what? The price at which you are going to sell the product, or price at which you are going to buy the product. Okay. So that's the base. So SAP says that, okay, that's the base amount. Let's then calculate. So that is a step one, first step. Okay, step 100. Second step 110. Okay, and it says that, okay, it talks about the output tax. and that is a condition type. Again, what is a condition? Don't worry about it. The condition type is a reflection of the type of tax, because within that country's law, there will be different taxes, as we discussed. There will be output tax, there will be input tax. Okay, that means output is sales, input is purchase tax. Okay, and then non-deductible input tax. They may have scenarios where some part of your input tax, that means some part of the tax what you when you buy the product, you are paying some taxes, and that taxes what you paid to the seller. Now, in the VAT regime, you need to reimburse, or you can collect that from the seller, sorry, from the buyer of your product. When you are selling the product, you can collect it. Okay, and that is not always 100% is collectible, and that is the reason why we have another condition, or basically tax laws of that country. So we have some non-deductible input tax. That could be multiple kinds of non-deductible. So, not to confuse you guys, these are nothing but the tax laws of that country, and based on the tax laws, SAP has translated that into a configuration whereby we have all these as different steps of calculation. Okay. Now, I want you to focus here about something called a condition tax, and that is something called the accounting key. We'll discuss about those, in a minute. But let's get into the understanding of the tax setup now. Okay, so now we understand, go back and understand then, okay, that the legal entity has a country, and that means legal entity is what? A company code. That company code has to deal with and comply with the requirement or in that specific country. Okay, tax laws of that specific country. So that is nothing but a tax procedure. Now, a tax procedure is set up in SAP by capturing all the different kinds of taxes, which is called in SAP system as a condition tax. Okay, so this is hidden, but this is called condition tax. So we have this thing, but yeah. So let's go and see it in the system itself. Okay, before we move up, before we go there, let's discuss about this process diagram as well. So SAP setup wise, how it looks. So we discuss about the country has a tax procedure. Country's laws are captured in something called tax procedure in SAP. Now, these are SAP terminology, guys. These are not tax terminology. Okay. And the tax procedure has condition types. We discussed, which saw it on the screen. We'll go on the SAP system as well to check. And the condition types have something called an access sequence. Okay, what does that mean? Well, access sequence is when there is any complexity in calculating the tax. That is where the access sequence come in, whereby that specific tax, okay, if there are some variables or that specific tax is applicable. Let's say, for example, we discuss about input tax. That they discuss that income, like input tax. Let's say input tax. We have said income tax, no, input tax. So input tax. If that input tax is to be calculated, and based on, again, there are different laws for that specific tax, then that is reflected or that is captured in something called access sequence. As the name suggests, access. So that means SAP has given us, okay, how you calculate that income, input tax. There is a process in place whereby first, some access. That means number one is this, number two is this, number three is this. So that means the system will run in that sequence. It will go through different, we call it tables in that access sequence. So what is an access sequence? We'll discuss about that in a minute as well. But access sequence has different tables with different condition records. What is condition record? That means that's information captured, which is used to derive the tax. Okay. Again, these are all for complexity. Access sequence is something SAP this concept of access code is used in other, not only for tax, but other purposes as well, and is also used in taxes. Okay. Now, and then access the records or the condition records for access records has something called tax codes. Okay. Now, does that make sense? Now? What does that tax code mean? You have come across something, a terminology called tax codes before, or if you haven't already, you will come across that quite regularly if you are working in tax domain. It's called tax codes. Tax codes are the place holding where we maintain the properties of that tax, specific alphanumeric code where the properties of a specific tax is captured, including, but not only, but including, which is an important point, the including the tax rate. Okay, so this rate, because that's most important. Sorry, guys. I think something happened and I was thrown out of the webinar. So, so let me now then log into SAP and show you the the configurations or the setups of all these tax relevant setups. We'll discuss that in a minute. Okay. So let me quickly log in. Hopefully you guys are able to still see and access this. I am not sure about uh, you have any problems or you are able to access. Okay, so let me share. I am logged in now. SAP screen, and we are going to go to the configuration bit. I'm going here. Okay. Okay. Now, what do is you will go to financial accounting because tax, because these are called different modules in SAP. Okay, tax is a part of finance, so we are going to the financial accounting. Earlier, what we did, we saw the setup of the company and company. We saw, the group entity and the different legal entities within different countries. Now we are discussing about the tax. So if you go here and financial accounting, I went there. Financial accounting global settings. Ooh. And now you see that that's called tax on sales and purchases. So the this is the transactional taxes configurations is set up here. So if you go to basic settings, I go here basic settings. Now you see check calculation procedure. Okay, so this is nothing but same, they call it calculation procedure, sometimes it's called the tax procedures. And now you see here three different domains here: define procedure, define condition types, and define sequence. Okay, so what did we discuss about the procedure? Okay, so we'll go to the tax GB just to show you now the GB setup, or that this is there. Okay, yeah, this one. Yeah. So let's say this is the setup. Okay, again, standard SAP, when SAP delivers the software, it is, all these tax procedures, they come pre-configured. That means, SAP already gives it with gives you the template already in there. So that means you can chop and change later on, but it's kind of, already there. So now if you see, these are procedures, okay? And this is what sales tax rate written, or you should have called it VAT rate written, but anyways. Now, if you see, okay, again, this is an application is tax, so you should see that. So now if you go to control data, I selected that and went to control data. This is where you saw the screenshot, but I wanted to show you as well. Okay, now you see, so these are the different condition types, and the description. What is this? So that means this in UK's law, these are the taxes, transactional taxes, and we have defined all these different setups as well. We won't be going through all these setups, which may be very complicated for you as well. But we will discuss as well about the accounting key as well, and that is again. Let's discuss about the accounting. So now this is for the accounting posting. Okay. How do we post? So for example, there is an output tax. Okay. Now output tax is calculated. Okay. We configure here, and this is used. Why is it going to be used? It will be used on a transaction. Okay. Transaction means what? It will be transaction for sales and purchase. Okay. And then how is that system is going to pick this up, because there is an assignment of country to tax procedure. Okay. So you understood that. And then there has to be an accounting posting. Okay, that means the VAT, if it's a recoverable or non-recoverable, based on that there has to be an accounting posting. And how do you post it? Which account do you want to post it? Or which GL account, general ledger account? Okay, if you are not familiar with general ledger account, guys, you have to understand it, because if this is a finance model, you have to have the basics. Okay. So we won't be going through that level basics here, but general ledger, is different. It denotes, or it portrays, or it shows different types of incomes, expenditure, assets, and liabilities. So that's what it's all about, which helps you to pull up a trial balance, and which is used for profit and loss account and balance sheet and financial statements. Okay, so that's the basic. But anyways, so now this is where, or this is what is configured. Like we just assign it your MWS, but MWS, what is MWS? How that's going to treat the accounting entries, that's set up somewhere else. Okay, so now let's go back, and we will go to. So now you understood that the tax procedures are country-specific laws, different laws, or different are reflected and are shown as different condition types. Now these condition types, we saw the condition types. Okay, defined condition types. Let's take an example. These condition types, what is a part of the tax procedure. Tax procedures have different condition types, and different condition types. We discussed about it earlier as well. Let's take one example. Okay, there are so many conditions. I'm just trying to one. Okay. Let's take an example. I want to go to input tax. We discussed input tax. So this is where we configure, or we set up the properties of that condition type in here. Okay, in here. Now you see. Are you guys recording live stream, or am I on live stream? I'm not sure, guys. Let me just check whether I am live. You are able to see, guys, or not. Okay. Hopefully you are able to still see me. Uh, and the technology is always unpredictable. Okay. So now you see here condition types. Again, condition types captures the different kinds of properties of that tax. But if you see that it has got something called access sequence. So that means a condition type is an assignment of condition type with access sequence. What is that? It's called tax classification, which MWST and access sequence. Okay. Now we'll go further down so that you understand that. Okay. Tax procedure has condition type, and condition type has what? Condition type has linked to access sequence, and access sequence is where there are multiple, there could be multiple. In this case, what you see, there are not multiple tables, but one record or one specific table is accessing. What the table is? That table has an assignment of departure country with the tax code. Okay, what does that mean? So that means this is something, information has to be captured. So you capture a specific for a specific country, a specific tax code, okay, and these are the countries and tax codes are, and how many tax code per country? That will be multiple, because a country may have, for some products, again, this here is the complexity. For some products, there would be a standard rated tax. Just for example, it's 20% or 15%, standard rated tax. But some products may be exempted. Some products may be zero rated tax. So those are different, which are reflected, or these are called the tax codes, where the rates are defined. Okay, and all one country may have different tax codes. Okay, so now if you see here, for example, it's in 80, Austria or Austria, okay, and Belgium. How many Belgium has? Belgium has, if you see, multiple tax codes, B3, B1, B2. So one country is Belgium, has multiple tax codes here. Okay, so this is a table. Okay, table what? Table number is 003. This table 003 captures the information of different countries and different tax codes. Now, with that being clear, that you understand that how in SAP it goes to a, because of the complexity of tax laws in different countries, SAP has given us the ability to define the tax requirements in SAP stream itself. Okay, SAP's configuration streams. Okay, so now we understood the tax procedure, tax condition type, and then condition type has an access sequence which is associated with the country and tax code. What is that? A link of country extended to a tax code. Okay, so that is one country has multiple tax codes, and these tax codes are driven, or is derived based on different different transactions. So sometimes the tax codes have to be given in a transaction when you are processing a transaction, like a sales order. So you are creating a sales order in, or a billing document, that is nothing but you are invoicing a customer. So you manually select the tax code, and that is in financial module, in the finance module. Okay, that's a manual. Okay, we call it a manual FI, manual financial module. Manual, you are booking the transaction or sales or purchase. So that is, you have to select it manually, the tax code. So you have to decide. Also, SAP has its automatic tax code selection process is there, which is based on an access sequence. We discussed about it as a access sequence in SD module, in sales and distribution module, where we have all these we won't get into that about the pricing procedure and all those things, but that is where when taxes are calculated, it could be calculated automatically, okay, based on the condition reference. Okay, so you can set up like, okay, this customer I'm selling to, customer number 001, and if I'm selling product, let's say material number, this product is ABC. Now this customer 001 is ABC. I want it to apply, let's say tax code A0, which is let's say 0% tax. Okay. So that is again the same technology or same concept of access sequence is used in SD module to derive tax codes in SD transactions. When I say SD, sales and distribution. Now, hope it makes sense to you guys, so you're able to understand it. Maybe too much for you, but I'm just wanted to get into the basics so that you are clear. Again, feel free to message me if you are not clear on anything. I will be more than happy to explain you the details of how the tax is derived. Okay, so now we understood the cycle. Okay, now the cycle, as you know, is we discussed about the cycle here. Okay. Whatever is that isn't here. We discussed about it in our yeah. So this is a very important screen which explains you how the tax rates are given, okay, from a country's specific tax laws, how it's translated into tax rates which is applicable to a specific transaction. Okay, how this is set up. The cycle is like this in SAP. Okay, so now we'll go to the tax rate bit and we'll conclude here, guys. We'll discuss about the tax rates. How is it set up? We discussed briefly as well. We saw the country has an assignment to tax rates, or sorry, tax codes, country, and you saw that the table there, country and the tax codes. But now let's discuss about it. Let me show you. This is another very important bit. Okay, which you will be coming across quite often if you're working in tax. This is called tax code setup. Okay. Now, before we see that, let me just show you as well the the tax. You understood the tax condition type and calculation type. Now, let me just show you another thing of the assignment. Okay, so that you understand. Now, access sequence, you have seen that as well. This is we discussed about 003. We saw that the records mentioned in the 003. No, sorry, access one and we saw that. Gas classification, we saw that. And this is how the access look like. We saw that earlier. So you see here that tax classification and the tax code. That is how the table is maintained. Okay. So now we will move on to another couple of things and we'll be done for today. Assign country or region to calculation procedure. This is a very important bit here. Now, if you see, one country is assigned to how many tax procedures? Just one. You see that GB as a country is assigned tax procedure or tax GB. Why? Because one country has one law. That can't be multiple tax authorities. As one country is governed by one law. Then in that law, there could be multiple ways of calculation of taxes, multiple types of taxes may be there, but that law is what, and that law is what is captured in the tax procedure. We understood it here. Now let's move on to something called we saw that tax codes. Now we'll discuss and we'll see the tax uh, code setup here. The transaction code called F2XP. Okay, this is a very basic one. You have to memorize, or you don't have to even go to the navigation here, and you can maintain the tax calculation. If you go to the calculation here, okay, define tax code, so you can also go this route as well. Okay, so if I go to, let's say, country GB and click in here, now let's take an example. I expand it. Okay, so see, okay, standard rated output here. So let's say tax code A2. I chose here. So what do you see here? What you see here, exactly what you saw in the other screen of the access sequence. Okay, so the country and tax code assignments are defined. Also you configure the tax codes for a specific country in here. And guess what? This is the important bit you are looking for. The tax rate is maintained here. The 20% is not percentage, this is by default is a percentage rate, but you maintain it like 20, and then hit enter and take this zeros, 10 or multiple zero based on the your system setup. But if you see here, couple of things. One is this is a country specific tax code, and this is linked to a tax procedure. Why? Because you are always the country's laws, as we discussed about, is governed by the tax procedure. Okay, and this is important. Output tax, because there has to be an output tax, there has to be an input tax, and this what you see, this specific screen of these elements, condition type. What do you see? What are these? Does it relate, or do you remember anything? Well, you are right. So this relates to the tax procedure setup. So the way we have set up this tax procedure, tax GB, if you remember, we had all these at different levels, 100, 110. We have these different condition types, accounting key, tax type. These are all been pulled from this tax procedure. The thing what we just maintain on this transaction type is this bit, a tax rate 20%, and okay, it doesn't pull, we don't pull it from the tax procedure which is maintained in this screen itself. Okay, so this is a connection, this is FTXP, or this maintaining the tax code is a connection between FTX, between tax procedure and okay, it pulls the data from tax procedure, but additional configurations are maintained here, which is tax percentage rate. And if you see here, these are the setups. Okay, this specific, this configuration consider properties. So that means you define for this specific what specific tax code, what are the properties of the tax code. That is output tax, input tax, check ID, EU code. So these are all, this is for tolerance, we have, different setup ways. We won't be going through that in depth, but this is where you define the properties of this tax code. Along with that, you also define the tax, based on the specific accounting key, and then which is linked to a chart of accounts, where you want to post this to a GL account, which is a part of the chart of accounts. So the properties of posting, how exactly you are going to post it, recoverable, non-recoverable, what kind of a account it is. So that is defined in accounting key, but the chart of accounts is under which we have all the GL accounts are configured. And that is where we set it up, saying that which GL account, this specific tax code, if it's used in a transaction, which GL account it will post to. All right. So now probably, hopefully you understood, guys, the entire cycle. Okay. Sorry, it took a couple of minutes more, but hopefully you understood the process of right from the beginning of having that tax laws of a specific country, and how that is translated into a specific tax rate, and which is used in a transaction when you are selling or buying a product. So that tax code is used to decide tax rate. Okay. So with that, I am done, guys. Thank you very much for your participation. But I would definitely want to learn from each and every one of you about what exactly you have questions on taxes. Okay, and in SAPs, and in following days as well, we'll be covering more kind of trainings as well. But what you'd like and how you think I can improve so that I can deliver a better training for you guys. So just let me know in the comment. So, I'll be more than happy to just, change my content, the way of presentation based on how you would like to use it. Okay. So, and feel free, if you like it, please let me know. If you do not like it, you want it to improve, please let me know. So with that, I am concluding. Hopefully, this all the recording and everything went well. With that, I'm concluding here. Over and out, guys. Bye-bye.